Gentlemen, we will be starting the conference call now. Good afternoon and welcome to the press conference of SBI's first quarter result of financial year 2017-18. Please note that all audio participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the initial address. The flow of event will be as follows. Chairman Srimati Arundhati Bhattacharya will give opening remarks, followed by Q&A for the TV media. During this session, the print media will be in the listen-only mode. Once the TV media has finished with their questions, we will open the call for print media question and answers. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Srimati Arundhati Bhattacharya. Thank you and over to you, ma'am.
Thank you. Good afternoon. As you know, today we have done the first quarter results of the merged entity, that is SBI, merged with its erstwhile associate banks and the Bharatiya Mahila Bank. So just as a beginning, I would like to say, it is important for us to compare apples to apples. And therefore, what we have done is we have obtained the numbers to the extent that it is possible. And these are all audited numbers in respect of the merged entities. And we have actually provided these numbers in the presentation that has been uploaded on the website. And my request is that you should have a look at those numbers while you are actually comparing what has been done this year. The other thing that we really wanted to talk about was the fact as to what exactly has been done during this past quarter. Now, during this past quarter, as you know, on the 1st of April, we merged the general ledgers of all the 6 banks. Subsequently, on the 2nd of April, we merged the granular data numbers of the Bharatiya Mahila Bank. After that, till the 22nd of April, we took a break because it was important for us to enable the auditors to do the audit of both the 31st March 2017 as well as the 1st April 2017 merged numbers. From the 22nd of April, we started doing the granular data merger of the remaining 5 banks. The first of the banks, that is State Bank of Travancore, was taken up on the 22nd of April. After that, we took a 2-week gap in order to ensure that the merger had gone correctly and the numbers were coming out properly after the merger. And thereafter, from the 6th of May, every single weekend we took one bank. So State Bank of Mysore was merged on the 6th of May, the State Bank of Bikaner and Jaipur on the 13th of May, the State Bank of Patiala on the 20th of May, and we ended with State Bank of Hyderabad on the 27th of May. Thereafter, the entire numbers were looked at to ensure that they were correct, and then the reports were taken out only by the 10th of June. In the meanwhile, what was happening was that besides the data merger that was going on, the administrative setup also was undergoing a huge change. So we did the merger of the administrative offices, we reallocated the branches to different regions, we decided which were the branches that would actually have to go in for merger so that subsequently these branches could be reopened elsewhere. We had a look at the accounts and how they could be mapped to various people. So while this entire project was going on, we were also looking at migration of the loan documents to the new processing centers and remapping to different teams for follow-up, mapping and shifting of the branches to different controllers, movement of the staff themselves, because we had to mix up the staff of the mother bank with the associate banks, and obviously the rationalization that I told you about. Now, as a result of this, what happened is during this period of 1 quarter, the kind of follow-up that we need to do on the retail side, that went missing, and that was expected. We were aware that this was going to happen, because obviously at the time when you don't have the data, you don't have the mapping as to which branches you are supposed to look at or which accounts you are supposed to look at, you can't really do much of a follow-up. And that is the reason why, if you look at the slippages numbers, which is something that has been bothering the markets, I would like to tell you that the slippages numbers that came in this quarter is in the range of 26,249 crores. Now, of this, 8,363 are from the corporate book, And the corporate book, 95% of the slippages have come from the watch list. So only 5%, that is some 19 accounts of very small value, they came from outside of the watch list. The rest of it, that is 17,886, actually came from the retail book. And again, the reason for that is simple, because while we had done the rationalization, or rather, you know, the proper kind of mapping with our accounts, for accounts up to 50 crores in the erstwhile EABs, this had not been done for accounts below 50 crores and for the personal segment book. Now this is the book that we have now aligned with ourselves, and this is what has given us this slippage of 17,880 crores. This has been compounded by the fact that during this quarter we could not do any kind of follow-ups, and also compounded by two other factors. One, of course, is the waiver period, that is the forbearance period that the Reserve Bank had given in respect of the demonetization. That period has fallen off. This has resulted in a hit of around 1,800 crores. And the other aspect, of course, was in respect of the agri portfolio in the states where there is an anticipation that there may be some kind of waivers. As a result of this, the NBG book got impacted. Of the 17,880 crores, around 35% is SME loans, around 40% is agricultural loans, housing loan is 14%, and P segment is around 11%. Now this is an area which we very firmly believe that we can pull back in many ways, and we have given certain numbers in the presentation. If you all have seen the presentation that we have already put up, we have said that while for the entire year we are expecting this kind of slippage in this particular area of NBG to be around 30,000 crores, but we expect to be able to pull back sufficient amount over there, and that at the end of the day we believe the net increase will be in this area only 7,500 crores. So while we are looking at a net increase of 7,500 crores, on the other side in the corporate watch list also we have given a guidance of around 24,000 crores, as a result of which we have said that the slippage ratio, which was really at a high of 5.78% in FY17, it is already down to 5.38% in the first quarter of this year, and we expect it to come down to 3.3% for the whole of FY18. And in this context, you know, after I speak, I will ask both of my MDs also to speak on this. Just to give you a flavor of what more has been done, during this period we have already merged 122 administrative offices and 594 branches. The mergers have also gone through already during this period. We expect to finish the rationalization of branch networks within September 2017. Unlike what we had suggested earlier that it will take a year and a half, we are now fully geared to complete this entire exercise by September 2017. We expect that out of this rationalization, we will be able to save in excess of 1,160 crore. Of course, this money will come over a period of time as this rationalization, the savings from that kicks in. Further, we also would like to say that we also expect to redeploy around 8,600 people into the sales team on account of the rationalizations that we have already undertaken, and this redeployment is already underway. In respect of our numbers, we have to say that interest income, we have been able to get around 0.76% more if you consider YOY, that is quarter 1 FY18 over quarter 1 FY17. Now this has to be seen in the light of the fact that the MCLR has come down, the base rates have come down, 60% of our book is now aligned to the MCLR, and also the fact that in quarter 1 traditionally the advances book does come down, and it has this time as well to the extent of 65,000 crores. So in spite of all of these impacts, we still have been able to come out with a slightly improved number on the interest income. On the non-interest income, actually there is a fall of 8.62% YOY, and the reason for that is basically on account of the fact that not only have interest rates and yields come down, but also there was a one-time figure of 907 crores in the first quarter of last year, which was to do with the sale of NSE. Now, because of this one-time number, this number is looking a little skewed, but I would like to, if you go through the specific numbers, you will find that in many areas we have done quite well. In respect of interest expenses, though the deposit base has gone up by 13%, we have been able to restrict the growth of interest expenses to only around 3%. The operating expenses actually have been kept excellently in check, and it has gone up only by 3.72% YOY. As a result of all of this, the operating profit is showing a negative of 13.72% YOY. However, if you look at the loan loss provisions are still up by 7.62% at 12,125. The standard asset provisions have come down mainly on account of two features. One, as I told you, that the loan book itself has come down by 65,000 crores, and the other reason is that some of the restructured standard assets have actually slipped, and obviously the provisions pertaining to that has actually now come into the loan loss provisions. Overall, therefore, as a result of all of this, our net profit, if you compare like to like, has actually gone up by 435%, in the sense that in Q1 of FY17, if we take these 6 entities together, the profits were 374 crores. This is now at 2006 crores in respect of the same entity. So, like to like, actually the profits have gone up substantially. In respect of the other details that we wanted to give, we would just very quickly talk about a few numbers. Interest on resources, for instance, has gone up by almost 26%. Now, one reason for this, of course, is that the portfolio has gone up, but we would like to say that in spite of the yields falling by over 54 basis points during this period, we have been able to do very well over here by churning the portfolio at the right times. In respect of the interest on deposits also, we have restricted the outgo only by 4%, and the reason for that is that our average CASA has increased by 25.75%, and we are talking about average CASA over here. So, the growth of average CASA has actually been very impressive. In respect of the fee income, again we have done exceptionally well. Fee income has grown by 16.21% during the year. As I said, this profit and loss on sale of investments is showing a negative figure only because of the NSE 907 one-time impact of the first quarter of last year. We have done well on forex income, raising it by 17%. Recovery in written off accounts has also gone up by over 19%, close to 20%. So, total non-interest income therefore has been impacted mainly by that one-time number of 907 crores. In respect of fee income, as we said, we have done exceptionally well. The commission on government business, though it has gone up by 2.7%, turnover wise actually we have gone up close to 13%. However, because more and more government business is coming on the e-platform, therefore we have this issue of the commissions actually not going up all that much. However, because much of the government business is now migrating to the e-platforms, this means that there is a ability on our part to redeploy more and more of service personnel from the branches into the sales and marketing teams. The commission on LC/BG is showing a negative number, minus 54%, only because there has been a change of accounting, which is now currently on accrual basis instead of upfront cash basis. So, this is something that will smoothen out over a period of time. Transaction fees have gone up in quite a healthy manner. Cross-sell fees again have gone up hugely by 143%. One other small area of interest, for the first time mutual fund fees, actually commissions from mutual funds have actually gone up above commissions received from insurance area. So, we have received around 134 crores from mutual funds and only about 103 crores from the insurance vertical. The other miscellaneous income also has shown a very healthy growth of 71%. Staff expenses have been very well contained, and to that extent that we have gone up with a very small figure in the staff expenses. In fact, hardly, if you look at quarter on quarter, it is flat. We are negative by 0.75%, and operating expenses overall is up by 3.72%. Cost to income ratio has increased, but this is mainly on account of the income side rather than on the cost side. In respect of the employees, during this period from 31st of March, our employee strength has gone down by 7,247 on account of retirements as well as the VRS. However, we have had around 625 people joining us during this period. In respect of the net interest margin, again, we have come down there on account of the very many things that have happened, mainly on account of the reduction in the base rates and the MCLRs. We are hopeful that this shift that has happened, more or less now the shift is has gained momentum, and that will continue. Also, the repricing of the 1-year MCLR is also, it has also kicked in. But in respect of all of this, because we have now factored in the entire slippages, we believe that going forward MCLR will definitely be, the NIM will definitely be able to show some kind of a increase. The market share in deposits has gone up by 53 basis points. As I told you, the good thing about our deposit franchise now is that CASA is growing, has grown at 23.6%, whereas term deposit increase has come down by 6 to 6.22%. And for the first time, I think in a number of quarters, our share of current account in CASA has actually gone up by 12 basis points. In respect of one other area, I thought I would just give some color, that is the amount of increase that we have shown in advances. Now, overall advances, if you take it, it is showing an increase of 1.46. But if you take out the amount that has gone out on account of food credit and the FCNB loans and add back the amount that we have increased in commercial paper and in corporate bonds, then actually speaking, the whole bank advances has actually gone up to 5.2%. So basically, the credit book to some extent has shifted into the market book, that is the corporate bonds and the CPs, and there are of course one-time hits, as I said, of the outflow of the FCNB loans as well as the food credit. But if you factor all of these in, the growth in the advances actually not as tepid as it would appear otherwise. Overall in the advances, we have grown quite well in the retail at 13.31%. On the corporate book, we have not yet got the differentiated numbers of the 6 entities, but overall in large corporate, mid corporate and SME, there has been a fall by about 4.35%. In respect of the home loans, again, we have grown very well at 13.92%. Here we have been able to bifurcate the erstwhile AB portfolio and our portfolio. Our portfolio has actually grown at around 16.7%, but the AB portfolio, because of certain difficulties in the technology piece, that has not been able to grow. The reason for this mainly was that they had a version of the loan origination system which was of a earlier province. As a result, they could not immediately log on to our systems in order to log on the loan origination. These things have now been all taken care of. Not only that, the processing centers obviously changed because of the change in branches. So this this classification and this linkages that we had to put in, those have also now been put in. And if we go by the July figures, I think most of them have now settled down in their new roles and they are performing quite adequately. Our capital adequacy remains excellent. In fact, most of the numbers over there, or all of the numbers over there, are better than what is expected in March 2019 on account of the Basel III kicking in. So to that extent, our entire total capital is at 13.31%. Our CET1 is at 10.06 and total tier 1 is at 10.67%. In respect of The digital too, we are doing very well. The amount of work that we have done in the digital area is beginning to show, in the sense, for the first time, internet banking alone is now accounting for 30% of the transactions, and in respect of all of the alternate channels together, this has actually gone up to now 80%. If you look at internet banking, June 16, it was at 24%, so we have gained 600 basis points there. POS was at only 6%, now we have gone up to 13% over there. Of course, this has been helped by the demonetization impact, and if you look at card usage is up almost 200%, 190.77% to be exact, and in respect of the debit card spends, our market share has gone up by 482 basis points. So to that extent, you know, in respect of the digital, we are doing exceptionally well. The number of POS terminals also have increased from 3.35 to 6.05. So within a year, we have doubled the number of POS terminals. Number of transactions has trebled. In fact, it has gone up by from 3.35 to 10.77%. And as we said, the value of transactions has gone up by 200% from 8,285 to 24,680 crores. Our buddy, SBI Anywhere, all of them continue to do exceptionally well. The SBI Online remains the 5th most popular online global financial site. We have around 4 crore users. 140 crore transactions have been done during FY17. The SBI Pay, similarly, we are getting about 39,000 daily registrations, and 2.5 lakh daily transactions are taking place on this. In respect of creating the ecosystem, we have about 8,16,981 merchant acceptance touch points, and for this we have used all the Bhim Aadhaar SBI, the Bharat QR, the POS, all of these are being equally leveraged for all of them. On social media, we continue to remain one of the most popular and the most followed banks. In respect of financial inclusion also, now the financial inclusion, the FI account deposits have gone up from 10,000 crores in June 16 to 18,611 crores now. The average balance in these accounts is 1,345, and we have only 23% zero balance accounts now. Similarly, in respect of transactions through the BC channel, we have seen a 59% growth in this. In the social security schemes also, we are slowly beginning to do much better. All of our subsidiaries have done very well this time. SBI Fund Management has shown a growth of 72% in net profit. Similarly, SBI Cards has shown increase of 49% in their net profit. SBI General Insurance from 0.43 crores has now gone up to 50.04 crores in this quarter. So all of them are performing very, very well. Now with that, I think I've covered most of the major points, and I will be open for questions. But before that, I would request our MD Corporate Banking and our MD National Banking to quickly give their take on what is the asset quality that they see going forward, because as I know very well, this is something that very many people are interested in listening to.
Good afternoon. I think the chairman has covered most of it. I'd just like to add a few more things. One is, of course, as is already told, there's about 40,000 crores. About 40,000 crores of loans have moved to the market. Now, obviously, you know that these are basically the market takes all the good rated, well-rated loans, and to that extent, still, you know, the book, corporate book, as far as the post-merger is concerned, of the large corporates, we still have 75% of the book which is investment grade and above. And in the mid corporate as well, we have about 64% which is investment grade and above. So this is despite 40,000 of our, as I said, advances moving to the markets, and obviously they're all very high rated ones. The second part is that, you know, largely a lot of corporate advances are taken in the second half of the year, traditionally, and then repaid in the first quarter. And if you see, about 10,000 crores of fertilizer subsidy, 12,000 crores of food advances, around 8,000 crores of oil advances, and another actually about 8,000 crores of normal repayment that has happened. So almost 40,000 crores of repayments have happened in the first quarter of this year, and that has also impacted the credit growth. So if you do, largely most of them will start to kick back in the third quarter and fourth quarter. So I'm quite hopeful that the credit growth in the last 2 quarters will be much better as compared to what it is today. As you know, the watch list we had given in the month of May after our March results, and largely the watch list took care, as we have been saying, including the associate banks. And there was a comprehensive review of all the accounts, all the stress accounts, and subsequent to that the watch list was done. 95%, as the chairman said, of the slippages that has happened out of the watch list, and we are quite hopeful that we will our analysis of the watch list has been quite intense and quite comprehensive, and we are quite optimistic that slippages will largely happen from that watch list. And the remaining ones also have been very small accounts, which I said, the watch list typically took care of 50 crores and above, and to that extent about 19 odd accounts were slipped outside of the watch list, which is comparatively a very, very small number. Going forward, again, as I said, we are quite optimistic that the remaining watch list of about 24,000 plus crores is where we feel that the major slippages will come from. Even as far as the slippages that has happened in the corporate side this quarter, about 4,000. We can give you the figures later. About 4,800 crores of slippages has happened in the large corporates, and about 3,200 crores in the mid corporates. The large corporate sector is largely one diversified group which has slipped, and that is covered more or less 4,300 crores out of the 4,900 crores that has happened. So we as I said, going forward, we're quite optimistic that there will be growth post, depending how the flows to the market happens, there will be growth in the credit portfolio. And also we are quite hopeful, as I said, in terms of guidance on the watch list that we are given, the slippages will largely happen from those watch list.
Yes, regarding the NPAs in the retail assets, so just to supplement what Chairman said, that if we look at the geographical spread of these NPAs, 6 states where the merger is there and or agriculture, this waiver has been announced, these geographies have been impacted majorly and accounts for almost 70% of the fresh slippages. So rest of the geographies, the work is going on smoothly and situation was very much under control. A couple of factors which contributed to this situation was definitely, one was forbearance, which is about 2,000 crore. In fact, if we take into account the associate bank, that waiver, agriculture in Maharashtra and Karnataka particularly, and Punjab, these 3 states are witnessing major impact. Merger, of course, in 90 days, what Chairman mentioned, that is a humongous task. If you look at it, that we have added almost 6,000 branches, reorganizing the whole thing within a short period, starting from 22nd April and 30th June, where the movement of people has taken on a very large place. Each and every branch has been remapped to the new controlling office. Branches at our what we call BPR centers, they have been mapped to the centralized processing centers. And the first quarter, I would say that whatever brunt was to be borne in terms of the commitment of the management bandwidth and resources, that has happened. And July onwards, our entire machinery, as per the revised organizational structure, is working very smoothly, and results are beginning to be observed. both in terms of growth as well as in terms of the quality of assets. The guidance which we have given in this, one factor I would like to clarify is that the impact of waiver is very much there, and it does has some bearing on the tendency to repay the loan. But on the same time, we are expecting that almost 3,000 crore will be coming from the state governments who have announced the waiver. Besides, even in for the education loans, our two geographies get always impacted, which is Chennai and Tamil Nadu and Kerala. So in Kerala also, state government has announced a scheme which will be giving relief to the student loans. So that is one factor. About the housing loans and P segment, our worry is much less because there are certain issues which will be fixed very quickly. Apart from the follow-up, there is an impact of what we call single SIF. So that deduplication had happened in the State Bank of India, but after merger, that exercise again has commenced. SME single SIF means the account.
If agricultural loan slips and he has a home loan,
the home loan
will also slip.
slip.
So if the agricultural loan, when that gets
upgraded,
the
home loan
will
or
also get upgraded.
upgrade.
So that has actually had an
impact. So it is only the SME piece where we have said that we would try to maintain it at whatever level has been touched in June, or there may be a marginal increase of 400-500 crores. Our the guidance which has been given about reducing the NPA is mostly coming from the reduction in home loan, P segment loan, and the agricultural loans. And despite the announcement for waiver, the machinery for renewal of KCC, which has a huge impact on the quality of the agricultural loan, it is going on, and the busy season has now commenced. So as compared to the first quarter, the next 2 quarters, as far as agricultural loan is concerned, we are very, very confident that we will be able to reduce the NPS to the targeted level which we have given. All the targets have been given on the basis of lot of analysis, and we are confident of achieving our targets.
So, thank you. I think that's the basic thing that we wanted to say. We have been saying for a long time that the physics of merger has gone through, the chemistry has just started. So, you're seeing the chemistry now. So, I think, we have done a huge lot of work in this 3 months, 90 days of very concentrated, solid work. But obviously, it will have its own impact. And that is the thing that we have to take care of over the next 2 quarters. So, yes, we'll take questions. Yeah.
What's the overall exposure the bank has to the 12 identified accounts?
Oh, okay.
Quantum of additional provisioning would be required.
See, the additional provisioning that is required, the total accounts are outstanding is 50,000 crores, and the total provisioning that would be required is 8,571 crores, of which we had already factored in 5,000 crores, because that is the amount that would have been required in the normal course. So the additional that is required is only 3,000 crores. 50,000 crores is the 12 this thing, of which the amount of provisioning required in FY18 is 8,500, of which 5,034 was already factored in. Okay, on account of the fact that this is known that this is the aging process. So aging process. So additional that is required is only 3,000 crores.
When you say factored in, it means you still have to make it.
Yes.
Yeah, it will happen over a period of time. So, but it is already factored in. Yeah.
What are you saying? The uncertainty is to the extent of that 3,500.
That's right.
But of the 8,500, how much is already provided as of
Not out of
No.
2,500.
No, it will happen whenever it's difficult to tell you that, because it is all goes by date. Whichever quarter it falls due, it will happen in that quarter.
To what extent would you look to improve the PCR? It stands at close to 61%.
That's right.
You would be looking to.
So it will depend, at this point of time it is very difficult to give you a guidance, but as you know, SBI has at all times tried to improve PCR wherever they could. And actually speaking, before the merger on a solo level, we were at, I think, 65%. Yeah. So to that extent, our intention always is to take it up. But to give you a guidance on that is a little difficult. But wherever we can and in whichever way we can, we will always try and take it up.
Would this be sufficient if you take into account regulatory compliance, particularly with respect to the 12 accounts?
12 accounts again is not a problem. 3,000 additional for a bank like SBI, I don't think is a very major thing. Because the rest is already worked into the aging. We already knew that this is to be done. And accordingly, all of our workings have been done on that basis.
रियल एस्टेट सेक्टर के अंदर ओवरऑल बैंक का कितना एक्सपोजर है और क्या रियल एस्टेट सेक्टर के प्लेयर्स उनके खाते भी
नहीं, हमारे पास रियल एस्टेट सेक्टर में बहुत ज़्यादा नहीं है. Only 31,000 crores in the commercial real estate. We have never been very big players in commercial real estate.
That includes LRD also.
LRD also, exactly. Yeah, most of it is asset-backed lending. So we are not into developer financing to any very great extent. So we don't expect any big issues over there. However, what is happening is because of RERA, there is some delay in announcing of new projects as people go for the RERA certification, and some states haven't yet been able to notify RERA. So, you know, people are just getting adjusted to the new ways of doing things. So to that extent, what we are seeing in the real estate area is a little slowdown in respect of announcement of new projects. However, there is enormous interest in the affordable housing, and we are seeing a lot of people planning affordable housing projects, and that is an area we believe which in the next 12 to 18 months will actually start coming up very, very well. So जी, प्रधानमंत्री आवास योजना के तहत में जो हमारी अफोर्डेबल हाउसिंग की बात हो रही है, उसमें बहुत इंटरेस्ट है, डेवलपर्स के बहुत इंटरेस्ट है, बहुत लोग हमारे पास आ रहे हैं. ऐसा है कि लास्ट संडे हम लोग इनफैक्ट पूरे होल ऑफ लास्ट वीक हम लोग इसी के बारे में ट्रेनिंग्स दे रहे हैं, क्योंकि बहुत इंक्वायरीज भी आ रहे हैं. सो ये एक चीज़ है जो हम लोग सोचते हैं कि नेक्स्ट 12 या 18 महीना में हम लोग देखेंगे कि इसमें अच्छी ग्रोथ आने वाली है. See, overall in the standard stretched assets provision today stands at around 5,537 crores.
And now the remainder, is it all for?
No, it is for all standard stressed assets. It's not only telecom, all of that. Everything taken together, standard stressed assets provision stands at around 5,500 crores for us.
Non-performing assets?
Non-performing total provisions.
It's 80,309 crores. That is the cumulative.
Just for this quarter.
Just for this quarter? 12,000, I think.
Yeah, 12,125 crores.
Yeah, 12,125 crores. That 5,500 is cumulative, huh? It's not come only in this quarter.
That is the total standard asset provision on stressed accounts.
That's right. 12,125 is the loan loss provision for this quarter.
Ma'am, in the watch list, just wanted to get some clarity. You know, you're saying that you are expecting higher recoveries, and whatever slippages are going to emerge from the watch list, as well as some more recoveries during the year. What gives you this confidence? Because it doesn't seem that things are changing.
No, see, we have said the recoveries, what we talked about was mainly in respect of the retail piece. So that doesn't form part of the watch list. Okay, the watch list is on the corporate piece, and of course, in respect of the corporate piece, we do expect resolutions. You know, so we are after all working with the NCLT. That's supposed to be happening in 180 days. And till date, we have received full cooperation from all of the people who have been taken to NCLT, excepting for a few early hiccups. I think subsequently the cooperation has been full.
Are there any more cases that you've lined up?
To NCLT, yes, we are considering a number of smaller cases. Yeah,
we have done 12. 6 of it is part of that list, and another 6 more we have taken.
No, we have to see. You know, at this point of time, RBI has not told us what would be the provision requirement for the other cases. The provision requirement has been given only for the 12 cases that RBI had suggested we take to NCLT. For the rest of them, it is not required. At this point of time, RBI has not come with any clarification. And frankly, many of these cases are already old cases. They have already been in our books for 3.5, 4 years. So most of them would have quite a bit of provision.
Also, 3,000 crore you said will come from the state governments.
On account of it.
When do you think this is going to come?
No, it should, because both the state governments, UP, all the work has been done. They had created a website and individual farmers' details have already been given. Maharashtra government, the details of the scheme are to be notified, where I think a certain amount will have to be paid by the farmer also. So all those details are being worked out, but definitely I think in next 3 months this money should
within
come.
the financial year, I'm sure this
sure
is
it
going
will
to be cleaned up. There is no doubt about it. Probably December is a better
Better
thing,
estimate.
but definitely within the financial
Will there be any outstanding after this 3,000 crore comes?
No, outstanding, see, the fact of the matter is it depends upon the particular scheme. So it's very difficult to say what will be the outstanding or otherwise. What we are trying to say is that this 40% slippage that has happened in agriculture, out of that 40%, we do expect at least 3,000 to come from the debt waiver. In fact, my estimation is a little more. But we are taking a very conservative figure and giving you a 3,000 number.
हमने जो 23% आपने बताया जीरो बैलेंस खाते अभी भी है,
जी।
किस नंबर से कहां तक ये आया है? और
अरे हम लोग जब शुरू किए थे 97% था। जब हम लोग एकदम शुरू किए थे तब 97% जीरो बैलेंस था।
और एक साल पहले ये 31% था।
और जनधन का क्या फिगर रहेगा?
जनधन सेम है अभी, करीब
More or less it will be similar percentages. I don't think it will be very different. But ये जो accounts हैं, ये financial inclusion account, they may not be called Jandhan, but they are the same type of accounts. Criteria same है, Jandhan जैसा ही criteria है इनका, अलग नहीं है।
हम ये देख रहे हैं कि सेविंग बैंक डिपॉजिट के अंदर भी अगर 24% का ईयर जंप है और डिपॉजिट्स में भी अराउंड 13.5%, तो इसके पीछे क्या वजह है? क्योंकि जो रेट है वो तो ग्रेजुअली रिड्यूस होती जा रही है और लोगों का जो रुझान है वो मतलब डिपॉजिट की और दूसरी
देखिए ऐसा है कि
YOY जो ग्रोथ आपको नजर आ रहा है उसमें डिमोनेटाइजेशन का भी इम्पैक्ट है. So we got about 1,35,000 crore, and out of which, of course, about 70% has gone out, but still 30% is remaining. So that explains the higher YOY growth in the savings bank.
देखिए और एक चीज़ भी है जिसके लिए हमारी ये जो बेसिक FI अकाउंट्स बढ़ रहे हैं वो ये है कि जनधन में हम लोग एक एक परिवार का एक एक अकाउंट खोले थे, लेकिन परिवार में 5, 6, 7, 8, 10 लोग रहते हैं, तो एक आदमी का अकाउंट हो गया तो दूसरों भी सोचते हैं कि हमारा भी क्यों नहीं हो. इसलिए हम लोग देखे हैं कि इसका एक पुल इफ़ेक्ट है, यानी कि एक अकाउंट हम एक परिवार का खोले हैं. आज के दिन में अगर आप जांच करिएगा तो देखिएगा उसी परिवार से और 2-3 लोग भी अपने अकाउंट खोले हैं. ये भी एक कारण है जिसके लिए हमारी सेविंग्स बढ़ रही है. हमारी बैंक में आज के दिन में हर दिन 1 लाख करके सेविंग्स अकाउंट्स खुलते हैं. 1 लाख सेविंग्स अकाउंट हर दिन खुलती है ना.
ये जब आधार से सारे अकाउंट जब लिंक हो जाएंगे तो आपको लगता है कहीं ना कहीं कुछ इसमें गिरावट आ सकती है, क्योंकि
हो सकती है.
3-4 अकाउंट हो गए वो एक से ही करेगा और बाकी
सही बात है. और इसके लिए हम लोग ये भी किए हैं कि जिस अकाउंट में 1 साल से कोई भी ट्रांजैक्शन नहीं हो रहा है उनको नोटिस देके हम लोग बैकएंड से अकाउंट बंद कर देते हैं, क्योंकि जहाँ पे कोई ट्रांजैक्शन नहीं हो रही है उनको हम लोग नोटिस देते हैं. नोटिस में उन लोग अगर आते हैं तो बहुत बढ़िया है, नहीं आते हैं तो हम लोग बंद भी करते हैं. तो इस तरीके से बीच बीच में हम लोग अपने बुक्स जो है उसको भी क्लीन करते रहते हैं. आप जैसे कर रहे हैं, एक समय लोगों को लोग सोचे थे कि जितने अकाउंट्स होंगे उतने बार वो इंश्योरेंस उनको मिलेगा. जब उनको पता चला ऐसा नहीं है, एक ही अकाउंट में मिलेगा. बहुत लोग हैं कि दूसरे जगह बंद किए हैं कि मेरे यहाँ पे आके बंद किए हैं. वैसा तो है ही, लेकिन उसके बावजूद हम लोग को जो लगता है कि 1 लाख में से अगर ऐसा हो कि 20,000 भी डुप्लीकेट हो, बाकी 80,000 तो सही अकाउंट्स हैं, वो तो बढ़ ही रहे हैं.
Ma'am, the capital you raised in the QIP, has all of that been deployed, and if so, have you asked for any capital infusion from the government for this financial year?
No, for this financial year we have not asked for anything. And deployment, basically whenever the capital comes in, it becomes cash. After that it's fungible. So whatever we are putting it in, cash is not lying in the bank for us. So either it's in the loan book or in the investment book. It's obviously been deployed. I'm not going to leave cash hanging over there and not getting any return on it. That doesn't happen.
Is there any non-core?
One last question.
Lined up besides the divestments, you're going to undertake in the IPOs of something?
See, there will be some small other things that will come. Some of the strategic investments that we have, we would be looking at divesting those. But in the immediate next quarter, those are not expected. In the next quarter, the only thing that is expected is the IPO of Life. That's the only one.
But ma'am, we have done 2,000 crores of 81 in July at 8.15%.
That was another capital raise actually. We've done that. Okay?
Thank you.
Thank you. Thank you. Move to the other room.
Yeah,
Print media.
I thought.
Oh, that is separate.
Yeah. Next room.
Okay.
Yeah, you can listen
On the speaker.
the speaker.
Thank you. Ladies and gentlemen, we will now begin the question and answer session for the print media. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone.